quick update on Goldman Sachs. This trade, basically for an investment of $130 in 3 months, became 1,938 American dollars, which is a 15x return, or plus 1,490% interest. How's that for a successful trade? Good morning, it's Graham Healy from Trading Canary, Australia and New Zealand. It's Friday the 4th, and in Australia it's 9 a.m. and I just want to do this very quick video and just show you I did a reasonable descriptive video on what was happening with Goldman Sachs yesterday. This morning, after last night, having a look at the trading this morning, it just keeps going through the higher high. So I'll just briefly, this is be very short, but just briefly give you an idea what's going on. Now, I've brought the truth graph up here. So the truth graph is basically a strategic graph that's got the exponential moving average, the 9-day exponential moving average, and the 21-day exponential moving average. And in our beginners course, we'll show you how to set that up. And you can see the blue line and the red line. Sorry, this is not the truth. This is a smart income strategy. Okay, so see the blue line and the red line, where that crosses over, that's where the trade started, and at the bottom and at the top. And then you see the MACD lines, which gives you the actual moving volume averages. When these lines cross, this is where you start the trades. Now, you see here at a value of 526, the stock value is 526. The stock value now is 722. So it's gone plus 200. Now, if you got on board here, I got on board round about here somewhere, and this trade is like, even if you had one contract, I've just done up a little note here, sort of like a little sad face, like I said the other day. I actually sold this options contract that I had. I set it for a call of 745, where it's here at 723. And I sold it on Friday, the 28th of June for $400 US. Right now, I did that because I had another couple of trades that I wanted to pay for with that. So I effectively closed this one out and bought another couple of trades. One was FedEx, which I'm not going to go into on this video. Now, at this point, or last night, it was at a delta 40, which is, I won't go into the explanation there. Delta is actually the Greek terminology for change, a function of time. And there's values beside every stock value. So, when you do a contract with calls, there is a time expiry, and it as that expires, it has a delta time factoring beside it. So, delta 90, as close as it gets to 100, delta 90 is about, that's the maximum price, is usually getting up towards 1 or 100, where delta 40 is well on the way. Delta 50 is usually 50, 60, 70. That's well and truly in the money. Now, it was a delta 40 on, when you have a look at the interactive brokers site, which I'll do that in a minute, where you've actually got the all the trades sitting there, as a reflection of the New York stock market, you'll find that 745 on the 15th of August is now worth $1,938 US. Okay, what I've got open here is the interactive brokers site, or it's interactive brokers. and that's the interface straight onto the stock market. And the reason why I wanted to show you this, we've got Goldman Sachs up here, and Goldman Sachs on the 15th of August 2025. And remember, we were targeting level of the stock market price of 745. Now, I'll just show you. You see here, this is a strike price. That's the delta, which is 41. Of course, you know, the higher the delta goes, the greater the value to purchase it, because they're getting closer and closer to the actual target price. But in the trade I'm talking about, we had a look at a call of 745. That is now worth, there it is, the mid price. It's got, you know, the ask, the bid and the mid. It's the mid price that you'll normally pay is 1,938 American dollars. So that's how it works when you're looking at your interactive brokers site. So I wanted to show you that. The other thing that, I mean, I was a little bit vague on the percentages, but I quickly worked them out. In this short video that I'll insert in the original video, you know, you've got 1,938 American dollars made in 3 months on a investment of only 130 American dollars. So when you multiply that by 100 to get the percentage, now get ready for this, it's 1,490% return on investment. Now, that's over 3 months. So you got 1,938 divided by 3 months. That's $646 interest per month on $130. I'll just repeat that. That's $646 interest on only investing $130 per month over a 3-month period. Now that relates to, just listen to this carefully, that is actually 982 Australian dollars. Now, can you tell me, any bank out there, you put $130 in your savings account and they're going to pay you, well, 130 in Australians around about, to be accurate, we'll work that out. We'll have a look at what 130 is. It's about 100, it's almost 200 in Australian dollars. So we'll have a look at it. 130 US dollars to AUD, it's actually $211. So you put 211 Australian dollars in your account and the bank pays you $982 a month. You know, you can have 100,000 in the account and they might pay a couple of percent, 3%, something like that. So this is 15x, a multiplication of 15x over 3 months. There is no other investments that you can possibly do that'll get to this sort of level of return. All you've got to do is have the system behind it to do it. So this is just a quick video to give you an idea of the return on investment that is quite possible. So we'll continue on with the rest of the video, and that's Graham Healy over and out, and we will continue on. I'll just pause this part of the recording. So that's plus, well, close to plus 300. That's how you make money, by putting in $130. If you put in $130 here, which is around about the tariff time, that would now be worth, as I just said, just to make it accurate, almost 3,000 American dollars, from 1,000 to 3,000 American dollars, or 2,949. So, you know, that's gone 15x. I'll just quickly work that out again. Anyway, we'll have a look at it. 15 times, I think that's 1,500%. So, you know, just think about it. You put in $130 in your bank, and after 3 months, they contact you and said, oh, we've just paid you interest of almost, where are we? 190, almost 2,000 American dollars on a 130. So that's the value of getting the right trades at the right time. Now, if you've got a portfolio of 30 of them, the risk is only about $100, $130 per contract. You can imagine that this might be an exception, but the average probably on a good trade would be anywhere around about $1,000, $500 to $1,000 back, and about 10% of the trades bear fruit over a 3-month period, and you start rolling it forward like that. So I just wanted to show you that to start with, and you sort of get a bit excited about it, and you think, well, gee, this stuff does work. Then we look at Goldman Sachs. This is a truth chart, which is a slightly different, they're the same charts, but they're slightly different strategies for looking at it. This sort of gives more of a, the difference basically, without going into it, these candles are the ordinary candles, where if you're selling in the trading situation where buying and selling is going on, like say, for instance, we'll give this example here on the 30th of June, the sellers won. The candle's red because there were more, ultimately that day, there were more sellers than there were buyers. So the sellers selling off sort of won the day, the candle's red. But when you go over to, we're looking at the 30th, then we go over to the smart income strategy, or we're looking at the different, we're looking at the 9-day exponential moving average and the 21-day exponential moving average configured this way. You'll have a look at the, what was that? I said the 30th. The 30th is a green candle, right? So these really, they're what they call the Hekinarchi candles. They've got a different formula calculating them out in the background. So they'll either, if overall I think you've got more buyers and sellers in these ones. Anyway, the net result is that if the buyers are in the majority, this will turn green and it'll remain green. Whereas back on, I think this is correct, back on the other side here, it has a different reflection. There's a different mathematical calculation behind the candle. So sometimes these will show red, like I said here. You've got the 30th of June, and you go over here and you get to have a look at the 30th of June again, and it's a big green candle. So it sort of reflects, if you've got the majority of buyers and sellers being buyers, it pushes it up green. So these candles, I'm not quite certain, to tell you the truth, the mathematical reason behind it, but there is a difference between the two strategies, and this one here is basically based on these two exponential moving averages crossing over, and then you just follow that chart, where the other chart, which is the truth chart here, this one here is basically just has 3 lines. One line, of course, is a 21-day exponential moving average, and then the 50-day simple moving average, and then the 200-day simple moving average. So I think that's 5 years out, the average on 5 years, and then that's the average on 50 days, or a couple of months, 3 months, whatever that is, divided by weeks, approximately 2 months. So this one is it's just got different exponential moving averages to read and gauge by. The main one is a 21-day exponential moving average, where the charts usually oscillate around the 21-day exponential moving average. So you've got, you can see how it oscillates around. And then when you see a price action movement dropping down to the 200-day moving average, or I think that's represents 4 to 5 years when you divide that into 200 days, 365 days in a year. It's going, what would I say? It's going to an all-time low, or an all-time high, all-time low. So you've got to cross-check these charts with other charts to get a full perspective of what's going on. Anyway, I don't want to go into that in any great depth. Plus, the other thing you can do, of course, each individual chart, each individual exponential moving average, you can examine that in greater detail, like on websites like Investopedia, which is sort of like the Wikipedia of trading. You can get into that, and you can do education courses and all this sort of stuff. But at the end of the day, the key is you just want to be able to read the charts, accept that they've done the maths and the science behind the charts. What you need is a data to interpret what's going on that chart. So I just wanted to show you the Goldman Sachs. This is probably the smart income strategy chart is probably the blue line red on. That's probably the best representation to make it simple. Just look where it started here. The lines crossed over. That's when you begin the trade, and it increased by over 300 points on the stock market. So that one, you start here at about $130 and you wind up there with, as I said to you before, on it was 198, almost 2,000 American dollars. 15x return. You'll never get that in any bank in the world. You're flat out getting 5%. So I think that represents about 1,500, 1,500 percent or something like that. I haven't quite worked that one out for this morning's flash report. Now, straight away you go to Goldman Sachs. These other charts are represented more simply, like this chart here on the smart income strategy, and this one here on the truth strategy. You go to Yahoo Finance. They have just a simple version, and you can have a look at it here. I've got 1 day. This is what's happened today with Goldman Sachs. So it still remains strong. It's still advancing 1.8%, but I always look at what it gains in the point value and dollar value there. It goes up 7. When they're going up 5 to 7, this was up at about 17% over the last, or 17 points over the last couple of days. But when she starts to go at +5, more than +5, you've got a real movement in the camp. Okay. So when you look at the 1 year average with Goldman Sachs, you see where we are here. That's an all-time 52-week high. Further still, we go to 5 years. It's now an all-time 5-year high, and we go out of all-time altogether, and guess what? It's an all-time high, right? That's going back to 2005 or sometime. So this is pushing Goldman Sachs over the top. So I've drawn these charts accordingly, where I've got, this is the all-time high here that I've traced through the chart. It's now burst through there. So what it's done, it's gone to what you call a higher high. So just a flash broadcast just to demonstrate to you how easy it is, once you've got the setups done, how easy it is to get these trades or make a lot of money on not much money to invest with, right? So just we'll go through this again. Where are we? Goldman Sachs, Trade Canary. Now, I'll go straight on to Trade Canary. This is where we do all our data processing. So the data processing side of things is done on this page, and I've brought up Goldman Sachs here without going through all the details of how you get there. And this is one big picture on the profitability of Goldman Sachs, and this is on the Trade Canary software that what we call is the professional hedge fund data analyzer. You've got the 1 year chart based on 1 week for 1 year, so a weekly chart based on the 1 year weekly chart. And then more importantly, you've got the industry strength versus Goldman Sachs. The blue line is all the banks on average where they're going over that particular year. This is Goldman Sachs, and it dropped here. This will be around about April sometime. Yes, at 4th 25. That's when the tariffs were introduced, and then suddenly she started to climb, and it's been climbing ever since. That is part of Trade Canary and how to read the data. I won't go into this. It's just a quick video. This is all the the 52-week high. You see there's indicators there. This is all part of it. I've gone through this in other videos, but this gives you the whole story at a glance when you're interpreting, what will we do on this particular trade? Let's check the company out. Let's check the figures out. They're all on one page, like one big executive summary. Now, this is our website. Here we go. Trade Canary Australia, New Zealand. And you can go straight on this website and you can just have a look through there. And, we've got various plans available. We've got the beginner's course available here. And I'll just go up to the top here and show you that. You've got a service list, a program, book online. Here's the program list. We'll go through there. Here is a how to use Trade Canary software and diagnose the money flow on the stock market, view the details, and you've got various chats about that. And we'll go here, program list, book online. This is, and you've got the various options open there for you. So if you want to do the group training, we've got our accountant online, just a general meeting, having a chat to me, Capital 19, basically that'll set up your account, go straight through to Capital 19. Okay, that's Graham Healy over and out. Just a quick one on Goldman Sachs and just how that trade exponentially went through the roof. Now, one contract is $130. That almost went up to 2,000 American dollars. Now, if you had 10 contracts, right, you think about it. You had 10 contracts if you had, an account to handle 10 contracts. So that would be $1,300. And then that would be, was it 10 by $2,000, $20,000 you would have made. So that's how, if you get the right trades and you have the right analysis, you can make a lot of money on the trades if you've got the correct information before you start. So Trade Canary provides you with that. Trade Canary and Trade Canary Australia and New Zealand provide you with the base information to make informed decisions on these trades. But I was just a little bit excited today because Goldman Sachs went through the roof. It's gone to its highest high, and I thought, wow, obviously what Donald Trump's doing in the USA is working, right? Okay, Graham Healy over and out. Have a great day and safe trading, and always trade within your limits. And what that means is that when you put money forward for a trade, you might have, say you've only got a small account with $1,000 in that account, you're only putting 10% of that. That means about $100, $120. So you don't go putting a lot of money in, but the returns as I've just described, which happen over time, you've got to have your portfolio rolling forward with maybe 30 trades in that portfolio. And then you'll get one or two of these trades that will shoot to the roof or increase to an amount where you might make 400 US dollars like I did out of Goldman Sachs myself. But if you want to hold on to it for another couple of days, bang, they're at 2,000 American dollars. It's quite possible. Okay, Graham Healy over and out. Have a great day. I just want to put this concept before I finish off. Trading is like tending a tree in an orchard. You've got to tend that tree, you've got to water the tree, and when it bears fruit, that's the trades. So with all this trading that I was talking about, basically you might have 30 trades and you've got to keep an eye on those trades, you've got to keep an eye on the stock, where it's going. You filter the information through Trade Canary, get the analysis, and just keep an eye on it. Once you've set the trades in place, it's a matter of just waiting until they start to grow fruit. So I just wanted to put that illustration in there for you because that's how I look at it. It's like a money tree. It doesn't happen overnight, but you've got to tend that portfolio field. You've got to keep looking after it, and then you'll turn up in the orchard one day, as you would as a farmer, and you'll see the fruit starting to come, and then it starts to ripen over time. That concept, I just want you to get that concept in your head so that you can understand it. Okay, Graham Healy over and out. Okay, that's the end of this flash report, but if you want to sign up for our beginners course, just go onto tradecanaryaaustralianewzealand.com and click on the page, or give me a call personally. SMS me first on 0411 393 503. That's Graham Healy over and out. Have a great day.